Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Mike Agne. Remember, new shows are posted every Monday and Thursday. You can subscribe to our show on iTunes and YouTube. Now, if you're enjoying the show, please leave us a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with Mike Agne, Chief Investment Officer at Magnelibra Capital Advisors, LLC. Topics discussed in today's show were why Mike chose to begin his career as a prop trader instead of an independent trader. He shares with us the essential skills that he learned from being a prop trader that are important in a trader's path to becoming a successful trader. We discuss the markets that Mike chose to trade and why he trades them. He shares with us his fundamental and technical approach to trading, his process for entering and exiting trades, and how his strategy gives him an edge. And finally, he gives us his thoughts on blockchain technology. Thank you all for listening, and please enjoy this episode. Mike, welcome to the show.
Hey, thanks, Anthony. Great to be here.
That's great to have you here, Mike. That's funny. You know, you and I were both Chicago guys, been in the futures industry for a long time. And we end up meeting because you do a podcast with Aaron on Chat with Traders, which is great, everybody. If you haven't heard it, go and check it out. Shout out to Aaron. He always does a great job. And then you and I end up chatting. We end up meeting in person. And now we're chatting regularly about the markets.
Yeah, exactly. And that's the one thing about like the internet that I think is great. And we actually put the social in social media. I think when you're out there on the internet and everything's just visual and electronic, and then you finally meet somebody, I think that's the greatest thing.
Oh, no, absolutely. I can't tell you how many actually good friends I've met now that have become good friends of mine through the internet. It's really amazing. So like I said, heard your story on Chat with Traders. Great stuff. For our audience that has not heard that, tell our audience a little bit about yourself and what you're doing these days.
All right. So, I spent majority of my career in prop trading, 12 years at Transmarket Group here in Chicago. And presently, I'm doing a startup CTA, Commodity Trading Advisor. We just got approval from the NFA last month, so we're taking on customers now. And my strategy is a global macro relative value one where I'm trying to take advantage of both the long side and short side in a non-correlated fashion. So our goal is to make money whether the market goes up or down. So,
well, cool. Congrats on that. And I want to go back to the beginning of your career a little bit and ask you why you decided to go prop instead of starting off as an independent trader.
Well, early on in my career, I always had an interest in it growing up. The futures market, my brothers were into it. So I always had those futures magazines laying around the house. So it piqued my interest. So I knew that's kind of the field that I wanted to go into, but I knew it was very tough. If you didn't start out on the Chicago trading floors, as a runner or something, or a phone clerk, you really had to have a connection in there. So having my brother work at the CME did help. And I finally got a job with Transmarket Group, and they're the prop firm here in Chicago that I spent 12 years at. And as far as, trying to get into it, independently, that would have taken like independent wealth, which I didn't have as a college kid in my early 20s. So I thought the only way to really get into the markets was through proprietary trading. And that's kind of what led me down that path.
All right, so I want to go back to some of the skills that you learned that are essential in becoming a successful trader. And you told me that discipline, respect, arrogance, humbleness, and nonlinear thought process are what you believe are the keys to becoming a successful trader. So let's break that down. Let's go through each one. First one you said to me was discipline. Talk to us about discipline.
Well, yeah, discipline, it's key, and it should be inherent to each individual. Everyone has different risk tolerances. So when I talk to traders or they're asking me this question, I say, well, for me, I know my tolerances. I know how much I want to lose or how much I'm generally wanted to make, and, I think having that balance of knowing both off the get-go and then, having the discipline to stick with that. So when you have a losing trade on and your cutoff is X dollar or X percent, you have to do it. And that's what I mean by discipline. If you don't have that discipline early on, and it doesn't happen, quickly, it's something that, you need to kind of condition yourself for. So that's what I mean by discipline. To be able to pull the trigger when your keys and your triggers say you need to pull the trigger, then you got to do it.
Yeah, see, I love hearing that from you, Mike, because I think discipline is the most overused word by people on social media, and people that teach people about trading, because they have to define what discipline means. I think a lot of people look at discipline and they think, oh, just be disciplined to my strategy. And you, like myself, we believe to be disciplined to a process. It's this, it's everything. It's not just saying, oh, the chart or my system says buy here, so I just have to blindly follow that.
Right.
I mean, it's about being disciplined to the whole process. So next thing you mentioned was respect. Talk to us about that.
Well, early on, Transmarket Group, Ray Cahnman was a primary driver of teaching us to respect the market, telling us that it doesn't owe you anything and it can move up or down despite what you think it will do. And I think if you have that, in your mind throughout your whole trading career, you realize that, okay, I may have this quant analysis telling me one thing and I'm going to put my eggs in that basket, but you know what? It could go the other way. And, I think by having respect for the markets, knowing that they can go any which way at any point in time, that's huge. If you know that that's there and you can, first respect that and realize that everything you do, it could change in a heartbeat. So
it's funny, as a new trader, I think back to the beginning of my career and how I felt that I was respecting the market, but I realized that I really wasn't. When I started to lose money and I just didn't have, I basically went into it thinking I was going to be making a lot of money. And then all of a sudden you start having a whole nother respect for the guys that are successful and for markets in general. I mean, to me, it's one of those things where somebody can tell you to have respect for it, but until you actually experience it, it's pretty tough.
Well, yeah, and it always comes up at the wrong times, right? Because anybody can take a winner off. It's the losers that are the problem, and and that brings me to the next discipline that I think is huge, which is arrogance. Because as a trader, you have to be arrogant. I'm sorry. People will say, well, what do you mean? Well, you're a risk taker. You got to have some guts and you got to step out. And that's not inherent to human, general nature. I don't think, at least. But, you need that kind of arrogance because you need to say, I'm better than the market. I know what I'm doing, because that helps you actually take that first step and put yourself out there. Because I don't care what any trader, what they'll say about, some guys will say, oh, I make money, this is easy. Everyone's nervous your first time. Everyone, even if you are arrogant, you're gonna have those second guesses. But I think that is a key as well, is you have to have a risk-taking mentality. And if you don't, it's gonna be very difficult to learn.
I agree with that. I think that you have to have a little bit of edge about yourself,
Edge, exactly. Yeah. Yep.
Yeah. And you and I, we're not saying go out and just, like you said, hey, it's easy to make money and then arrogance that way, but you just have to have this self-confidence that you go into it and that, you can do it. And like I said, to me, you feel like I remember watching all the traders on the floor and they all had a little bit of an edge about them, right?
Right.
They were all, you looked at them almost like they were characters.
Yeah, exactly right. Yeah. And that's what, it's a shame that the traders today don't have that, because you really saw the different personalities and you knew the guys that were had the risk-taking mentality. You knew who they were, and
Yep.
they just had the style and the guts to do things that, normal people wouldn't do. And I don't really think you can teach that, to be honest. That's something that's conditioned and learned and inherent to the individual. So, that's, it's unfortunate that the high frequency and algorithmic trading of today doesn't really have that floor mentality, that vision of the floor and how different, personalities are.
Yep. And the next thing you talk about is humbleness, something that, boy, have I been humbled in this business, man. I tell you what.
Have. Yeah. It's something that's the, flip side reciprocal of arrogance. And it's something that, it's usually taking place when things aren't going good. And, the market's told you that your arrogance is now waning. And now what are you going to do? So no matter, and traders go on streaks, they go on runs, and it's kind of like, I think Michael Jordan talked about this. It's called the flow. And that's great. But when you get out of that flow and things aren't going so well and the market's kind of humbled you, and that's when you got to really look deep inside yourself and figure out like why things aren't going the way that I expected them to. And, so the market kind of humbles everybody at certain points. And that's the time where you kind of figure things out. You dig a little deeper, you take a little time off and do a little introvert and retrospect work and see, what skills do I need to work on and why am I looking at things this way and why are they not working out?
Yeah, no, I agree with that. Last thing you talk about is non-linear thought process. Explain that.
Yeah, I think, a lot of people will come into trading in these markets and think like, well, okay, so this guy's making money, I can do it. And, I can look at the chart and we're going, and look at it and say, well, we'll buy it or sell it based upon this. But if it was that easy, then everybody would be successful at it. And it's not. And that's why I consider traders more like artists. And, they kind of have, that type of mentality because I can show two traders the same chart and they'll think different things. And to me, that's always shown me that perception is inherent to the individual. And no matter what we try to tell somebody, they might not see it the same way. So when I'm referring to like nonlinear, I mean like things don't, especially markets, they're chaotic. And you can have a linear process, but you need to have a nonlinear dynamic somewhere in there because it's kind of acts as a filter. And the markets don't always, the equity markets have gone up in a linear fashion, but we all know why. But generally markets are volatile, and you need to know that things don't work in the trading world in a linear fashion.
This is why I believe that there are no two traders alike, and you have to find markets and strategies that fit your personality and be willing to try a few different markets, try different strategies, and see the one that clicks with you, as opposed to just saying, I'm going to trade this market and I'm going to trade it with this strategy. I just don't see how that works.
Oh, yeah, you can't be rigid. You got to really, and not only that, and you said it exactly right, you have to find what market fits you. And that's a great point to make. And I also think the time frames are that way too. Some people are very good at short-term micro-minute time frames, and some people are better at a longer global macro picture.
Absolutely.
And, so it challenges you all the time, and that's what we kind of love about it,
Yep. Now, Mike, I want to break down your process on how you trade. So tell us what market or markets that you're trading and why you trade them.
All right. So in terms of primary markets, it's generally fixed income and indexes. But in terms of the CTA product, it's going to cover currencies, energy, and metals as well. So I moved from a primary fixed income like cash arbitrage trading into a more global macro process. And it's not very easy to do because for those that haven't been in the prop world, your goals are very different than portfolio management. It's completely different. And so not only do you have to generally change your time frames, but you have to change the way you inherently look at, the markets in general that you're trading and what you're actually trying to accomplish. So that's kind of been my challenge over the last, I want to say 6-7 months, is trying to merge all the skills that I learned from the prop arbitrage side and transfer that to a more global, macro, longer term portfolio percent over LIBOR kind of mentality. So my process now is in merging those facets of prop into the global macro picture.
So we talked about how you have to choose a market that fits your personality. So you're telling me that you primarily trade fixed income. How did that come about? Why did you decide to trade fixed income?
Well, early on in my career, and I got lucky through one of my mentors, John Baca, who I would consider, instrumental in honing my trading over my career. He was a trader that cleared Transmarket Group, and then he got me the job there. And they were a big fixed income shop. So they were one of the few that traded U.S. Treasury cash against the futures and options basis arbitrage. And it's for some reason I just picked up on bonds quicker than grains maybe or currencies. I understood those, but I really understood the mechanics of interest rates and bonds and pricing. And, having the mentors I did at Transmarket Group, Mark St. Amand and Jeff Conrad, and learning from those kinds of those types of traders that are very disciplined and understand their market so well in terms of U.S. Treasury cash and futures arbitrage was key to my growth. And obviously, I spent 12 years in total there and learned a lot from those guys and ended up doing very well there.
What parts of the curve are you trading? Are you trading outrights, options, spreads?
Yeah, I don't like and this is kind of weird being a bond trader. I was never, and I want to say never, a good outright trader, but I never really understood why you would just take that risk. I was always long, whether it be futures or short cash or vice versa. And to me, it was just the trade, the way the construction was of that spread that I understood it. I rarely went long or short outright, and people they think that's really weird, but I wouldn't consider myself a very good outright trader. I just don't look at it that way. I always inherently want to spread something, and maybe it's just a risk mentality control that I have. But I like looking at things that are correlated and not correlated, and I like looking at it from a perspective that I'm always long something and short something. And whether or not that, it offsets risk or not in some people's mentality, I think it kind of just makes me focus a little bit more on what I'm trying to do.
Talk to us about the strategy itself. Is it technical, fundamental, both?
Yeah, it starts off more research. I probably do a lot more reading and writing and data analysis than I do trading. And I think it's helped me to analyze let's just call them the numbers on a given day in whatever markets I'm focusing upon. It helps me formulate exactly what the monetary flows are trying to do, or where the big flows are actually, what kind of picture they're trying to paint. So it starts with a fundamental research analysis of the markets that I'm trading and what's affecting them. Then it moves to the technical side to say, okay, where's the VWAP at? What are the Fibonacci saying? What do the moving averages look like? Maybe analyze the volume on, certain price, if we've reached a higher low, or is the volume spiked? That is probably the big gist of before I even structure some trade or execute something. I don't think execution, is my key. I'm not a high frequency guy. So, although you do need a systematic approach to get orders off nowadays if you really want to, not lose too much in slippage. But the process is very fundamental, technical from the beginning in researching a trade, and then the execution will follow with, set parameters on win-loss ratio after that.
So do you consider yourself like a hybrid between systematic and discretionary?
Exactly. It's both. And I think that's necessary. I think I could not do the high frequency program and just let it go and try to program in various attributes. Even if you have a dynamic filter somewhere in there on some parts of it, I just couldn't do that. I don't feel comfortable letting the program run unabated without my attention. I just there's guys out there that do it and very successful and have good runs with it. I'm not comfortable with it, so I don't even contemplate it.
So take us through a trade if you could. let's focus right now just on the entry. Take us through what you're doing in your prep, whether it's the morning of or the night before, and then to the point where you actually go and execute the trade.
Well, I break down the single trading day into 3 time frames. So I focus on Asia, Europe, and the US. And so I will generally look to see what the Europeans are doing at that point in time. I'm based in Chicago, so it's like the worst time frame for me because it's 2 a.m. obviously. But I'll look to see what that time frame is doing to our general markets, whether it be fixed income or whether it be, with equities. They do the DAX over there or the Bund over there, and will transpire into our 10-year or into our NASDAQ or S&P. So I'll generally look, what they're doing and where the strength or weakness is. And if I'm executing it, generally the execution will take place in that European time frame. Is that what you mean? Is that kind of what or you want a specific, like, why do I pick one over the other?
Yeah, well, I mean, first, it's interesting to know that you're choosing that time zone to trade. So that was definitely part of my question. But talking about how you go through, like you said, you're systematic in some aspects, discretionary in others. What are you doing in your prep, deciding which market to trade, and then what gets you to the point to actually click the button? Is it a chart? Is it technical driven and fundamentals?
Okay.
Take us through that.
Yeah, no, it's definitely technical driven. So like I said, everything's like a long short. So I'm looking at a relative value analysis. So for instance, like right now, if you look at the emerging markets and you look at the S&P, you clearly see a huge divergence, right? The S&P's gone straight up. The emerging markets have gotten killed. And that's obvious because the dollar's gained strength. And, with all the tariffs going on and the Fed raising interest rates, that's highly negative for the emerging markets, but it's not good for globalization. So if you look at that, and let's just say we're looking at emerging markets versus the S&P 500. So I'm looking at that, currently, and I'm saying, well, how far can we push this? We're already at 2004 spread lows. Is the dollar going to continue to strengthen? Is the Fed going to continue on its path? So it's looking at the chart and saying what news could possibly come out to change this. And that's what I also mean by nonlinear process, because yeah, you should be short emerging markets, long S&Ps. That's the way it's been going. And that's a trend following CTA. We'll do that all day long. But I'm looking at it from a nonlinear perspective and saying, what news are we going to possibly get to change this? And where am I going to see it? And I can play this game from either a long emerging market, short S&P, or I can play it from a dollar euro currency play. Or I could be long U.S. fixed income, because it would be the Fed not raising rates to, continue to raise rates. So it's looking at those multiple ways of looking at a single trade and seeing where the least amount of asymmetrical risk reward is. That's kind of how I do it. And I don't want to give away too much because then everybody but that's how I look at things. And you know what? I'm an educator. You know what? If you're going to make money doing things and you're going to learn from what someone else, I'm all for it. I'm all for it.
Talk to us about your hold time. How long are you holding trades? And you said you don't do outrights. So
I shouldn't say that, because sometimes you get hung and you're going to be stuck in an outright. And so, I don't want to mislead people. Yeah, sometimes you have to do outrights. I just don't. I wouldn't say, okay, I like bonds here, I'm just going to buy them. I shouldn't say that. I will buy them, but I will have some other position out against it. If I'm going long 10 years, I'm going to be, long 5-year puts or something, or long bond puts.
Oh, so
something to offset. So I never really liked being just long, and then people will say, well, then you must use stops. And I can tell you right now, throughout my career, I've never used stops ever, because I just never thought that they only guaranteed loss. Why would I use a stop? I'll take myself out of a position. I'm not going to let something, take me out like that. And that's the prop mentality. But now it's completely different. So that's why when I'm in a position, I don't really like take an outright position, because I need to be, if I'm long something, I'm always short something else. So I don't want to confuse people and say, well, you don't trade stops, that's very risky. No, but I do trade a hedged position. So there's a difference.
Yeah. I'm curious, are you scaling into trades? Are you adding to them when they're going your way? Or is it just, one entry in, one exit out?
Yeah, I think, just to focus in on that, there's traders that have been very good at that. And I've throughout my career, and I think I talked about this in the other podcast with Aaron, I've never really scaled. I've never really done that. I've always had a fixed win-loss. So when I look at a trade, I analyze it and I say, okay, well, I think the bonds can go from 144 to 145.10 or something like that. And I've got my win-loss, and I know that's my area. If they get up there, I'm getting out. Whereas some traders will say, well, it's up there, I might as well scale in, and then it's going to still run, and I'll trail a stop up. And that's some traders. I'm not like that. If it goes my way and it's at my limit of where I thought it was going to go, I get out. Now, that doesn't mean I won't buy it if it gets higher than that. Then the analysis will say, well, you still should be long. And I won't care if I'm missing out and I buy over 145.10 again to get long, as long as my setup says you still should be long. So I kind of do it that way. I do not scale. I've never done it, and it might be a fault of mine, but I've just never done it that way.
I want to talk to you a little bit more about the technical side of things. I mean, obviously, because we've gotten to know each other, I know that you're looking at charts frequently, and I'm seeing some of the stuff you're posting. What are your favorite technical analysis tools?
Definitely the VWAP and Fibonacci's are like my two keys. I think Fibonacci's do a great job of showing market exhaustion and extension. I think VWAP, tends to be my magnet level to where, if we deviate too far from it, it'll generally pique my interest, whatever market's deviating too far from it. So I think those two. I don't generally focus too much on like any others than those two. Maybe some moving averages, obviously, that's inherent to the VWAP, but other than those two, I don't really focus too much technically. I'll look at on a CQG, I'll look at like a T-flow or something like that, but not too much.
How did you narrow it down to just those two?
Well, I like Fibonacci because it uses like set natural ratios that are found everywhere in nature, not just our markets. I'm a big study of symbolism and nature and spirals and those kind of things. So that just was inherent to me, and it made sense because I think as much as people want to deny like that we live in this system that's chaotic, there is some, I think, intelligent design behind it, and I think mathematics has a lot to do with it.
Well, what are the time frames that you're focusing on when you're doing your charting?
I generally focus on the daily and the 60-minute, and I'll look at the 10-minute base, just to get the execution a little bit more granular in terms of if I'm ready to execute, I'll look at the shorter time frame to kind of see what the algos are doing back and forth, even a little lower than that, the 1-minute chart, if I'm really getting ready to execute. But no, generally I'm looking at a relative value move for more than, a day move or some people are, high frequency. Everything's high frequency today, so they're micro minutes, but I don't look, my objective is not that.
So you're looking at longer term charts for basically your levels, your areas where you're going to be focused on. And then when they get to those areas, you're using shorter term charts to help you with execution.
Exactly. Yeah. Like I said, you don't want to lose too much on like a slippage if you're ready to execute. You never want to give away too much, but I'm not in there to buy the bid and sell the offer. It could be, a product that I might get to that point if the CTA gets big enough and that's an attribute of the fund, but as for now, it's not really. I'm not focused on that short time frame.
So systematic approach, you're using discretionary with your execution. You have two technical tools, VWAP and Fibs, that you're using. Longer term time frames for analysis, taking it down to the shorter term to help you with execution. What is it about your strategy that you believe gives you an edge?
It's not beholden to just long only or short only. I think, obviously the industry, the hedge fund industry, is under fire now because of their costs. But in reality, if it wasn't for the Federal Reserve and an upward linear market in the equities, nobody would be questioning it. But it makes it easy for groups like Fidelity to say, oh, we'll offer a no-fee ETF or no-fee mutual fund. But in reality, if the market's collapsing, that's never going to work, because people are just going to pull out, and they're never going to, they're not going to buy into it. You need professional money management, and it's kind of gotten a bad rap only because of this upward linear market move. But that's not reality. Eventually, this will change. I mean, this is the longest bull market run in history. I mean, there's a reason for that. The central banks have expanded their balance sheet 5 times. It means we're just supplementing asset price appreciation with debt, and vice versa. So it's it's kind of crazy to think about, but I think for in terms of your question, inherently the goal is to make money whether markets move up or down.
Yep. Last question I want to ask you today before we get into rapid fire. You and I, we talk a lot on social media about blockchain technology and cryptos. What are your thoughts on that space right now?
Oh, Anthony, I've been a big believer in it for many years. What really tipped me over the edge is when Cyprus seized Russian bank accounts in I think it was 2013. That really kind of solidified my viewpoint that this system that we have needs to change. It's archaic. Everything's digital now. There's no reason why we don't have a digital currency, and one that's not centralized, and controlled by one entity. And that's the scary thing about blockchain, and why the SEC is so reluctant on passing blockchain ETFs or cryptocurrency ETFs, because they know the power behind decentralization. And there's many people out, there's many out there that are kind of skeptical, and I really don't get it, because if you look at it from a pure supply demand situation, if something's capped, like let's just say Bitcoin at 21 million, it's capped, it's mathematically defined, and there's no way out of that. Nobody can manipulate that. They're trying it now. Actually, groups are trying now to come and create derivatives, create abilities to rehypothecate these cryptocurrencies, and that's not the real thing. I'm a big fan of the core Bitcoin. Buy it, keep it offline storage, cold storage they call it, and I think the technology has vast, properties that can be used, for the digital future. I think we're just at the beginning, the stages of this technology, and I think that's how people need to look at it. They don't need to look at it as cryptocurrency and a commodity. They need to look at it as a technology and what it can do for humanity. I think once we focus upon creating the ecosystem that's decentralized and trustless, I think that's the key, going forward. It's not cryptocurrency and the trading of it. Yeah, that looks great, and we're traders. We want to do that because it's volatile. The reality is this is much bigger than trading. It's about freedom and putting the power of barter and money back into the people.
So I think a lot of the skepticism comes from the traders seeing this type of volatility and these types of moves, thinking that a lot of these cryptocurrencies are in bubbles, which I do think a majority of them are.
Oh, for sure. Yeah.
I mean,
When I talk of blockchain, I'm talking about Bitcoin. I don't really, and maybe some of the other dApp providers, but I don't really deviate from Bitcoin, because it's been the tried and true tested stalwart. Even if you look at this last, this year, people are like, oh, it went from 19,000 down to 6,000, and now it's like, I think it's $7,000 or something. Oh yeah, well, it was 4,400 the same time last year. So what is that? I don't care that it went from 19 to 6. I just know it was $4,000 last year. So that's kind of how it's perspective again, Anthony. It's how you look at things from perspective, and not get caught up in the euphoria or the hype of what agenda somebody might have and narrative they may have and what kind of picture they're trying to paint. Just keep the perspective in line, and don't get over inundated with it.
Yeah, I mean, I always look to see what the people that are much smarter than I am are doing. And a few years ago, I started doing shows on Futures Radio Show about blockchain, because I was attending events, and all the top names, I don't need to name them right now,
Yep,
were all
yep.
talking about it. So
Yep.
I took notice. I mean, what do I know, right? I'm a trader. I trade these cryptos. I mostly trade Bitcoin and Ethereum. I'm not someone who claims to know anything really about this technology, but I
Yeah.
do see so many of the brightest minds in fintech talking about this that I can't put a blind eye up to it. I don't think this is going away. I think it's only going to get bigger.
Yeah, and you're doing your listeners a very great service because you're kind of, taking that veil down from this skepticism and actually, look at it not just from the trading point. Do a little research on the blockchain and what it really means and what they're actually doing with these trustless systems and decentralization. And then you'll realize that it's much bigger than just the cryptocurrency.
Yeah. Educate yourself before you judge something.
Yeah,
Yep.
exactly.
Great stuff, Mike. I got some rapid fire questions next if you're ready for those.
Okay, sure.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Mike, first question. What trader has influenced your life the most and why?
Definitely would say Ray Cahnman, just because I spent most of my trading career at Transmarket and underneath his tutelage. He installed a lot of my current qualities that I still obtain and have today. And also John Bacco is one of my mentors there at Transmarket as well, who still influences me today.
What was one of the hardest things that you've had to overcome in trading?
Oh, boy. Well, that's a tough question. I think basically migrating with the markets as they changed and as the participants changed. So, when you look at a market and you kind of know who's participating in and what kind of traders they are, but at any given point that changes, whether it be 6 months or a year from now. I think keeping your trading dynamic and going through these different times from 1999 to 2000 to 2007, 2008, those crises, and then up through this equity linear up move over the last decade. I think the challenging aspect is constantly improving your game so that you can stay above the market and continue your edge. That I think that's been the hardest part.
How has your trading process evolved over the years?
Well, as let's see, as I've grown as a trader, I think I've learned to focus less on the short term and more of the longer term picture. So especially now with what I'm doing now, it's much different than the prop trading where you're constantly, maybe getting in and out throughout a given day. Now I've progressed to, looking at things from a portfolio perspective and really focusing in on what the objective is there and protecting long-term profits.
What is one attribute that you believe every trader should have?
Oh, that's a tough one. I'd say you need a risk mentality. You got to have the guts to say, you know what, I'm putting this on. Let's see what happens. Roll the dice.
What's your favorite book about trading or the markets?
Anything by Michael Lewis, I think, is good. Nomi Prinz puts out some good ones. Traders, Guns, and Money by Satyajit Das is really good. I'll just leave it at those.
What's your favorite movie or TV show about trading or the markets?
Definitely Trading Places and Wall Street. Those are two staples. And if, as a mentor to any trader, I suggest you watch those two first.
I mean, every time they're on, you can't turn them off.
No, it's kind of funny because my wife's always like, wait, are you watching this again? I go, every time I have to.
What's the best piece of advice that you've received about trading?
The best piece of advice, that the markets can move any which way at any point in time.
If you could give the younger you advice after everything you've learned about trading, what would it be?
Oh boy, you really got to put that question on me. That's not really rapid fire. That's a very
It's deep.
deep, profound Alan Watts style question. I would say do the most that you can for the people around you when you can. Do what you can when you can.
Last question for today. When you're not trading, what's your favorite thing to do?
Oh, that's easy. I study electromagnetism and plasma physics.
Oh man, yeah, it sounds real easy, Mike. where can people find you on Twitter, and give us a website to check out?
All right, so my blog is under econemotions.com. You can find me on Twitter at econemotions, hitting bids at econemotions, and the newsletter. I think, Anthony, you're leaving a link, correct?
Yeah, I'll leave a link on everybody out there. I'm a subscriber to Mike's newsletter. I'm going to put this in the post, so definitely go and check that out.
And anybody can find me on LinkedIn too. I think it's under Magne777 maybe.
Well, everybody, we'll put that link in the website on the post as well. Mike, I can't tell you how much I enjoyed this. This was great. Thank you so much for taking time to speak with me today on Futures Radio Show.
All right, Anthony. Awesome. Always a pleasure, man.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.